Hello and welcome to this edition of Beat the Street. I'm Jeremy Naylor, the show that gives you all the tradable news and data you need to know ahead of the Wall Street Open. And there's a lot more earnings coming through today. We start off with General Motors, third quarter, topping estimates. But the company pulls away from estimates for the full year because of strikes by the UAW. Coca-Cola beats forecasts. It raises its full-year outlook as well. The stock is up all sessions on the IG platform. Another stock that's climbing today, pre-market, is General Electric, beating on earnings and revenues, and it boosts its full-year outlook. That gives us enough to be feeding on for the markets ahead. We're looking for gains at the moment on many of the indices. Let's take a look first of all at what's happening with the Dow Jones Industrial Average. We are up. Yesterday we closed at 32,936. 33,096 at the moment, 100 points up above the close of the cash session yesterday. But I have to say, from a technical point of view, this is just a small retracement in what is otherwise a market that looks like it wants to go down. Now, these lower highs and these lower lows, I'm waiting for it punch down below and a piercing of this 32,813 level, which would then give us the lowest print we've seen in the market intraday since the 1st of June. Could it happen today? Well, it may do. I mean, it depends on what happens, but we've got some good numbers coming through today. And I think this is really going to mean that we're going to get a stronger start to the trading session in an hour's time. Ditto the S&P 500. Yesterday we had a long-legged doji candle, but the important thing about the S&P 500 is that we did pierce this level of 4,200 mid-session yesterday, but the market managed to rebound. But we are below the 200-day moving average, which, as you can see here, was a support. And we haven't really traded below the 200-day moving average since March this year. So this is a sort of a significant level. And I think this retracement we've got at the moment might not have particularly long legs, but I think it's just responding to the upside that we've seen a number of these stocks perform in. So that is where we're expecting the markets to open on the S&P 500 and the Dow. The NASDAQ, well, it's a stronger situation, I have to say. We're up at 14,704, looking for gains at the start of today's trade, but I still would warn about going too long, if you see what I mean. If you are long on this, your stop goes below the underside of the lower part of yesterday's candle, so around about the 14,350 level. Currently trading 14,705. Again, this is just a retracement. Let's take a look at this channel here, because I think what we can do is we can draw a Fibonacci on here, which will help us gauge precisely where we could go here from the lows we had there. Let's move up there. That's the wrong way around, I beg your pardon. Let's move that off and delete that Fibonacci. And I'll take a look at another one because I want to measure the retracement potential here from this. So we've got here the level at 14,706. This, for me, if you're looking for a better price to get short back into this market, that would be the direction of travel. Few more days maybe of upside, and if we see some more good earnings coming through, we've got IBM, we've got Microsoft, we've got Snap coming, we've got Alphabet coming, all after the bell tonight. Tomorrow IBM, as I said, we've got Meta. So if we get some good numbers from all those companies, I think we could well see some further upside to go. But I think the longer term, there is this question about the concerns about the outlook for interest rates and just how the consumer is doing. And I think that's likely to occupy the minds of many. This candle move we saw yesterday is significant because it did pierce this line of support for the NASDAQ. So I think in the longer term, there is a downside to come. But looking for a better price to go short on these markets from where we are there precisely at the moment. Now, I want to stay on the charts because I think it's important to quickly take a look at what's happening with the dollar. Now, the dollar basket today has bounced off this lower line of support. This is the Andrews pitchfork, which I've drawn on here, and you can see this long handle of the pitchfork. It's provided us with lots of support, and then came the drop down to the first layer of this channel that we've got here, and then came the break. A big, long, thick candle on the way down, and now we've tried to test this line of support, which coincides with the 50-period moving average. We've got a rebound on that. I'm most interested to see what happens over the next few days to the dollar. At the moment, we're long dollars on the market, and this is manifesting itself against a good many crosses. The euro today down relatively heavily on what is otherwise a market that's been up recently, and sterling exactly the same. We got that move. We got the European Central Bank meeting on interest rates on Thursday, so that could help give us a steer on euro dollar later on. But at the moment, sterling is also down against that US dollar. So keep an eye on that as yields pull back from plus 5% down to 4.8%, which gives us a little bit of a better feeling for equities, I think, as the way things stand there at the moment. But let's take a look now at some of the stocks to watch, because in an hour's time, we are fairly certain, because we have all traded sessions on the IG platform, about how things are going to move. Let's take a look at General Motors first of all. It has today withdrawn its previous guidance for 2023 profits and near-term electric vehicle production, as costs related to United Auto Workers strikes jumped to $200 million a week during October. GM's first quarter net income fell 7.3% to 306. Now, let's take a look at the share price chart. We are up today by a margin of 0.75%, but we have tried to test the lows. Not quite as low as we were just a few days ago, but you can see here that General Motors hasn't really been this low in the market, not properly, since September 2020. Revenue rising 5.4% to 44.1 billion. The adjusted earnings per share tracked by analysts of $2.28 were ahead of Wall Street expectations, which I think is partly why we've got this little bit of a rise. But clearly, the concerns are about the long-term effects on what's going on with these strikes is really hindering what's happening with General Motors. Let's take a look now at what's happening with other stocks, because Coca-Cola has also reported third quarter numbers today. It has topped analysts' expectations against many belief, because we are concerned, or have been concerned, about the fact that we've got people peddling off buying soft drinks, sugary drinks, because of the impacts on health, which have become more and more focused. But we've got a rise of 2.8% today on Coca-Cola's share price. You can see clearly here there's upside. This is the downside I was talking about, the concerns. And I think recently we saw some comments as well, didn't we, coming through from the likes of Walmart, suggesting that people are now really conscious about sugary drinks. But none of it today. People seem to be prepared to pay the increased cost. We've got inflation now pushing the cost to the consumer up, and consumers are shaking this off. The company's also hiked its full year outlook earnings per share 74 cents adjusted against 69 cents last time around. Revenue coming in at 11.9 billion according to the latest thoughts on the next quarter. That's 11.44 billion had been the previous expectation. So Coke now said it expects a better performance in the full year. So these third quarter numbers boosting the share price by a margin of 2.7%. So Coca-Cola, another one where we are seeing gains. Let's take a look at another stock where we've got some positivity winning through. General Electric has raised its full year profit forecast for a third time this year after quarterly earnings topped Wall Street's estimates on robust demand for jet engine parts and the servicing sector as part of the servicing of jet engines, and a better performance in its renewable business as well. This company is based in Boston. It now said it expects 2023 adjusted profit per share of between $2.55 and $2.65. We have been looking for between $2.10 and $2.30. So that is better than expected as well. Let's take a look at what's happening with General Electric, which is traded all sessions on the IG platform, and it's up 5.8% today. There's the gain that we've got. Not too far away from recent highs. Let me just move that up to the recent highs that we had here, up at $117.70. Currently trading at $112.84. The stock looking as though it's going to open stronger when we get underway a little bit later on today. It's nowhere near the record high. I mean, you've got to go all the way back here to the record highs you saw back in August 2000 when it was up over $361. But nonetheless, this is approaching some recent highs at 117.70, 112.88. This is a company that's looking as though it's going to help that Dow rise at the beginning of today's session. So with a backdrop of commercial plane shortages, demand is high for the likes of General Electric for their aeroplane parts and also the engines that they supply. So General Electric doing well on the markets so far today. Stock to watch after the close of today's session is going to be Microsoft. The software giant has been flirting with recent highs recently. We're looking for earnings per share of $2.65. Up 13% year on year, revenues of $54.5 billion. So that would be up 8.8% year on year. Analysts are looking out for more evidence that artificial intelligence is playing an increasingly important part in the corporate strategy of Microsoft. And as you can see here, looking at this, you can see the share price chart with the company well past the $2 trillion market cap level. All sessions on the IG platform, it is currently up 0.25% at $331.68, away from the recent highs, taking up to the record high at $366.80. But let's face it, the company is doing well. And I think if we do get a more bullish outlook from where we are at the moment and something that might beat the street, we could well get some upside on here. If you are long on this, going into the numbers, stop goes underneath here at around about the $320 level. 331.60 is where we're trading all sessions on the IG platform, looking for gains at the start of today's trade. This company reports after the bell this evening, when you can trade that on the IG platform. Alphabet reporting after the bell. Amongst a number of companies providing figures, we'll be looking there especially to see just what's happening in terms of the advertising revenue that's coming through. Looking for earnings per share of $1.45. That would be a 38% year-on-year increase. Revenue estimate $63.1 billion, up 10% year-on-year. If you are a YouTube user, you would have seen pretty much every single video you watch has now got adverts in front of it. That is part of what Alphabet is doing. That is part of what Google gets in terms of revenue, and it's Alphabet's job to monetize these platforms that we all use. We talk about Googling, we talk about going places, we use Google Maps. We have all these facilities offered to us free on a plate. And of course, it's not free. We pay for it through adverts. And that's exactly what we'll be doing after the bell this evening, just to check in to see just what it is that's going on in terms of some of the movement in terms of advertising revenue. The stock at the moment is up 0.5%, just ahead of the open on Wall Street today, looking for a positive start. But do watch out for those numbers later on today. If we see numbers beating the street, you'll want to price a long trade with your stop loss underneath recent price action. You'll want to be targeting $142.78. Currently trading at $139.66. Stock on the way up today, ahead of earnings out after the bell this evening, when you can trade the stock on the IG platform. One other story I picked up this morning when we were talking about the early morning call in the European markets. I knew we'd be talking about this going into the session in today's trade on the US markets. And it's all about NVIDIA. It dominates the market for artificial intelligence computing chips. Now it is coming after Intel's longtime stronghold of personal computers. Now, NVIDIA has quietly begun designing central processing units, or CPOs, that would run Microsoft's Windows operating system and use technology from ARM Holdings. This is according to two people familiar with the matter, telling Reuters the AI chip giant's new pursuit is part of Microsoft's efforts to help chip companies build ARM-based processors for Windows PCs. Microsoft's plans take aim at Apple, which has nearly doubled its market share in the last 3 years since releasing its own ARM-based chips in-house for its Mac computers, according to preliminary third quarter data from research firm IDC. Let's take a look at NVIDIA share price. As I said, we're fairly confident this morning we'll be looking at gains. They're only small gains today, all sessions, but nonetheless it builds on the all sessions rise we saw yesterday. I think it was up over 3.5%. Today we've added an extra 0.75%, looking for a stronger start for NVIDIA stock at the start today. That's it. Looking at gains across the board at the moment on Wall Street, boosted mainly by some of those companies reporting earnings today, GE, GM and Coca-Cola. After the bell tonight, we're watching Microsoft and Alphabet. Both stocks I'll be following up for you. All sessions on the IG platform tomorrow morning on Wednesday's European early morning call at 7:30 a.m. See you then.